I'm Eric Homeyer of the Horizon Financial Group. Welcome to our workshop. Today we'd like to share with you some of the tax law changes that President Biden proposed during his presidential campaign and what they could mean for you. There is so much information out there to digest. So our hope is to simplify it down to some of the key items that we feel our clients would like to be aware of. Our goal is to help you make the path toward your financial goals tax efficient. So we need to be aware of potential tax law changes. Note, this is merely a non-political summary of what was discussed and is only intended for informational purposes. Before I begin, I find it is always important to review that there are 5 key areas of financial planning. They are preservation planning, retirement planning, tax planning, estate planning, and investment planning. Now, even though today's presentation is focused on tax planning, as a comprehensive wealth management firm, we try to always consider the impact of any recommendation we make, not on just one, but all these areas for our clients. During his campaign, the now 46th United States President, Joe Biden, released a proposed tax plan with a key focus on higher taxes for the wealthy and corporations. While these proposals are not yet law, it still could be helpful to be aware of them, so if they are considered, you can be better prepared. This workshop will look at some of those proposed changes. President Biden proposed increasing corporate tax rates. Under the Trump administration's Tax Cuts and Jobs Act, the peak marginal corporate tax rate was reduced from 35% to 21%. Now, under the Biden tax plan, the proposal is for the corporate tax rate to increase to 28%. Also proposed is an increase to the marginal tax rate for top earners, which are defined as individuals making over $400,000. Biden's tax plan would raise the top marginal income tax bracket from 37% to 39.6%. Now, the Tax Cuts and Jobs Act lowered that top marginal bracket from 39.6% to 37% in 2018. The proposal was non-specific, but here is a visual of what married, finally jointly tax brackets might look like if this were to occur. Biden's proposal calls for lifting the capital gains and dividend tax rates on filers with incomes above $1 million in income to pay ordinary tax rates on their dividends and capital gains, no matter how long they held the asset. This would imply that large earners or large gains could see those rates, usually tax advantage, rise to 39.6%. Here is a visual of what capital gains tax rates could look like if this happens. Instead of 3 rates, there would be 4. Biden's tax plan includes a cap on itemized deductions of 28% for those with earnings more than $400,000. This means for each dollar of itemized tax deductions, including charitable contributions, by the way, a taxpayer or couple filing jointly would only receive a maximum benefit of 28 cents per dollar. This 28% limit would hold true even if a filer is paying a higher marginal tax rate. Now, for example, if this were enacted and you have $40,000 of deductions, then even in the highest brackets, you would only save 28%, or in this example, $11,200. Biden's tax plan would phase out small business income deductions for taxable incomes over $400,000. This is a complicated piece of legislation, and his proposal did not share details, but we still need to acknowledge it. Proposed also is the elimination of the stepped-up basis. Biden's tax plan wants to put an end to the step-up-in basis. Stepped-up basis is a tax law that applies to estate transfers. When someone inherits investment assets, the IRS resets the asset's original cost basis to its value at the date of death. The heir then pays capital gains only on any gain above that new basis. For example, if an individual invested in $300,000 of marketable securities that is worth $500,000 at the time of death, their heir would pay capital gains on anything over $500,000 if the position were ever sold. This is because it received a stepped-up basis. If Biden's tax proposal were to become law, heirs would not inherit a stepped-up cost basis, and if they liquidated the position soon after receiving it, they would realize $200,000 of capital gains if they sold that $300,000 position for $500,000. One of Biden's more talked about tax plan changes is to significantly reduce estate tax exemptions from the current $11.7 million per individual back down to, I've seen as low as $3.5 million per individual immediately. This means estates over that value would be subject to an estate tax. This is something those who have larger estates should be aware of. Albert Einstein said, "The hardest thing to understand in the world is the income tax," while Will Rogers said, "The difference between death and taxes is death doesn't get worse every time Congress meets." Biden's proposed plan could change tax laws with a focus of taxing corporations and high-income earners. With both a Democratic House and Senate, Biden's proposed changes need to be watched carefully. As of now, tax change moves were not expected immediately, as the new administration has initially focused on getting the pandemic under control. We are keeping a watchful eye on any changes that could affect your situation. We believe that taking a proactive approach is better than a reactive approach, especially regarding income tax strategies. If you have any questions, please call and talk to us. So, what can you expect from us? Well, you can expect regular communications, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. Thank you for your time today. We do hope you found this session to be very informative. We very much appreciate the opportunity to assist you with your financial needs.